Hello and welcome to this video. In this video we are going to go over the new supply and demand software. We're going to iterate through the configuration settings and I'll explain what they do. And I think we'll leave how to use it to the symposiums. But I'll roughly and briefly touch upon how we might go about using some of these features here. Okay, so the core of this the supply and demand engine has been rewritten. Now I'm focusing on some things that I've noticed to be very, very profound as to why prices react at a certain level. And these things I've been watching for quite some time, and now I've finally got around to implementing them in the software. So let's have a quick look at the configuration and wander through it piece by piece. Okay, the product key. This we all know. This is on the license page on the Pipnotic website. This changes every month, the beginning of every month. So if your software stops working on the first of each month, please go to the license page, copy this value from the page and paste it in here, and then everything should be working just fine. We have the enable dashboard, which simply shows this here. We have the dashboard showing red, which means the interest rate swaps for this particular pair, the Euro USD, are positive when you're short, and they're negative when you're buying. So essentially that means that you will earn money when you're selling the Euro USD based on swaps, and the opposite will apply for when you're holding long positions here. And here we have the location of this. You can kind of put it wherever you want, and it'll simply move it around here. Sometimes it's nice to have it away from the bleeding edge price, because sometimes if price is close to the dashboard and things get a little bit difficult to see, so you can kind of put that wherever you like. We have round numbers. I have this and all functionality in the indicator set to false by default, but here if you set this to true, it's going to show you lines or levels in the market where we have kind of round numbers like the 100s, the 50s, and so on and so forth. And the spaces between these numbers will get smaller as you go down to the smaller time frames. So on the, for example, 4-hour chart, there will be 50 pips between each, and on the 5-minute chart, I think there'll be about maybe 10 pips between each line. So just so you know that. And here we have the width of that line. Down to the supply and demand, we have this setting here, which by default is disabled. As I mentioned, everything is switched off by default. Set this to true, and this will tell the indicator to start identifying these areas here. And we have risk reward multiplier and price imbalance period, or the release period. And this simply tells us when we have an area that's established like this one, it tells it that we want price to move 3 times the size of this area within 3 periods. So 3 weeks after this area has been established, 1, 2, 3, so the low of this accumulation candle, if prices move 3 times the size of that, then this area will be drawn on the chart. So this will happen pretty quickly. Then we have a new setting here, accumulation departure strength. I wouldn't fiddle too much with this. You can kind of set it to whatever you like, but I find this to be good if it's kind of left in the middle. And all this is doing is the candle that leaves the area of accumulation, it is telling the indicator that this candle needs to close far below this period of accumulation. So this candle here, it closed below the lows of all this entire kind of this peak here. You can see that the close of this candle is below all of these. So this is a really big area. And so when it's set to intermediate, for example, it's going to look for perhaps fewer candles than this, so maybe 5 candles. And so the lower the setting here, the less critical it's going to get. So I find that if you leave it in the middle, then it's going to find some pretty decent areas. We have the greater period multipliers. This simply tells the indicator to identify and draw areas of supply and demand on 0 means the current time frame, comma 1 means the current time frame and the current time frame plus 1. So if we're looking on the weekly chart, we're going to be in this configuration looking at weekly supply and demand and monthly supply and demand, because it's going 1 greater. But you can all do this to the negative side, so we can go, for example, -1, comma 0, comma 1, And if we look at that, then we'll be seeing daily, weekly, and monthly. So you can see here we have these micro areas, the red areas, kind of cascaded, typically in and around these areas of a greater period supply and demand. So those are quite nice when you're trying to refine your entries. Let's see, so we go down, I'll put that to 0,1, which I like. Supply and demand width is simply the line thickness of these rectangles. Then we have this one here, the manual bar count. Assuming that you want to go back a specific number of candles, so typically the software will look at the number of candles that you have visibly on your chart, and it'll multiply that value by 2, and so it'll be 2 times this. But if you want, for example, 1,000 or 10,000, then you simply put that value in here. Then it'll go this number of candles back to an analyze supply and demand. So you'll see pretty significant areas, because the ones that were qualified years ago will also be visible on the chart. Show consumed supply and demand. If this is set to true, like this, it'll show you where supply and demand was located and where it was removed. So we had this one here, which was tested once. We had this one here, which was kind of consumed by this demand here. It's been taken out, and so where a rectangle is located, it will then draw an X, and the color of it, of course, will tell you what time frame the area was calculated on. Here we have a purple one, so here we have a purple area of supply, so monthly supply. This is now gone. This move here took it out. This area of demand here moved through it and took this out. So we had this weekly supply, it's now gone. What area took it out? This one did here. So it's just a really nice way to help you identify what areas of supply and demand consumed opposing supply and demand. Okay, and we have trend lines. So enable manual trend line management. When this is set to true, when you draw trend lines, like I just pick some random trend line like this, the indicator will see it and it'll manage it. And so now when we go to the smaller time frame, like the daily, you can still see this weekly trend line. If you hold the mouse over it, you can see Pipnotic manual trend line W1. So you know that it's a manually drawn trend line, and you know that it was drawn on the weekly chart. One, by the label that you can see W1, but also by the color, because everything's color coded in the Pipnotic software. Okay, then we have enable trendline extension. That simply tells the indicator that it wants the trend line to extend past the second point. So if we look at this, if we just draw this trend line once again, and we go in here and we toggle that setting, if we set this to false, it'll only go to the other peak here, you can see here. So I like to, of course, project that into the future, because then you can essentially see where price will react or potentially react in the future. There it goes. Okay, and then we have the new feature that I added, enable auto trend lines. And this is great because it's qualifying areas that trend lines should be drawn on without you, oops, sorry, clicking around here. So you can notice things like trendline breaks and stuff like that, and I really like that because it's doing it on all time frames. So if you click down here, you can see that we had this trendline point, and this one price went up and it came down. We tested it once, we pushed through it, we kind of seeked liquidity approaching the lows here, and then we left from there. And it does it on all the time frames automatically. You can see here we had a high, a low, high, low. It's broken, and so you ask yourself, what area of demand caused market structure to fail? What's this one down here? But there's probably something just below here. So go to the smaller time frame. What I normally do is just mark it off like that, just draw it there. I go to the small time frame. I can see, okay, here we have it. This is actually the area of demand that caused the trend line to break. So we know this is demand because it's accumulation. So price rallied, accumulated, and then it popped up, and we took out this high, which is the trend line point. So this is an important area, the 113.80 area, so we can expect price to bounce there. But notice here, this is really important, that you see we have this trend line. So we have two qualified trend line points here. So we have, I think we have maybe this one here, and this one here, and notice that these candles have moved through the trend line. This is really interesting information because this is telling us that this move is probably overextended. So when you see stuff like this, when you see a trend line drawn but price is kind of moving through it like that, like kind of forming like a tummy, well then price is overextended and it'll probably move back to a deeper retracement. If you consider what we spoke about normally, we have a high, we have a low. This is kind of a low probability, like a 1 or a 0, and here we have a kind of 50%. This is like a 50% probability, and here we have, well, we never have 100% probability, but we have a higher probability. So the lower price comes, the higher the likelihood that it's going to continue moving higher. So this is high risk, and this is medium risk, and this is low risk. And when you see this, when you have the trend line like this, but price moves through it, that tells you to focus on the areas that are lower, because this is probably where price is going to go, because price appears to be slightly overextended for this particular move. So this is telling us we have thin liquidity, and so price will have to come back to the thick liquidity, which is going to be down here, before we continue moving higher from here. So just notice when price moves through the trend lines, and consider looking to buy lower and sell higher when you see that. Okay. Good. So this is a really cool tool. I really like it a lot. And here we have the same thing. We have trend line. Prices pop through it. So we probably have something in here that's done that. So if we go to the 50-minute chart, we can see that we have here. So we have a rally. Let me see if I can get the indicator to draw those for us. Yeah, here we have accumulation just here. So oh, this is nice. I like this one. I prefer this one. So if we mark that off like that, go back to the 4-hour chart, you can say, wow, price kind of pushed away from here and broke this trend line, causing market structure to fail. So this is just telling us that we'll probably see price react at the area of demand that causes trend line to break, and then price will likely move higher. And so this is how I'm using the trend line tool, and I really like it. And this has been implemented in the trading robots, the pools trading robot, and it's really nice to help validate some of these entries. And notice here we had a high, a low, a high, low. Price move through it, so we had market structure to fail, and so this is just telling us the price is likely going to move in the other direction. Cool. So this is a cool new feature, and I really like it. I'm using it an awful lot. We have this trend line point significance. This tells us how significant these points have to be. The higher the number, the more significant. So if we put this on, let's do kind of go crazy and go 30. You'll notice that these trend lines, they're going to look quite different. So here we have a really significant high, significant high. So if you go here, you can see, wow, significant high, boom, 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 boom. So when price comes up here to the top of this weekly area of supply, it'll probably line up nicely here, and then price will potentially move lower from there. So it's really useful to kind of fiddle with that setting. But I find that 8 is a pretty good one. Just be careful going below 8, because then things get a little bit choppy. I'll just give an example of that. If we put this on, like 3, for example, you notice that we get kind of bleeding edge stuff like boom, boom, like this. And so things get a little bit quick, you know, like this is not really useful. Essentially, we'd want to be looking at something a little bit more profound than that. And so try and keep it on at least 8 or above. Cool. Then we have the width of the trend line. We have the style. What kind of a line do you want? Do you want a dotted, dashed, whatever? You can decide there. Then we have the rectangles. Enable rectangle management. This is really nice for this. So if you decide, for example, cool, I want to buy here, so I'll put my area here, got my area to buy, I'll go like this. Okay, so the entry would be 70.37, the stop would be 69.95. My position size would be 5 microlots, and the stop would be 41 pips. And so this is just a nice way to kind of help us visualize our entries and our stop levels. Also, it helps calculate the position size as well, as we can see here. And the values that you can see here, they are taken from here. So we have extra capital. So assuming that you have $10,000 and you only have $2,000 in your account, because you don't, just in case the broker goes bust, well, then you would put $8,000 here, and that would add, this value would be added to your equity in your account. So it would calculate 1% risk based on what you have in your broker account plus the extra cash that you have in your bank account. Okay, which is what I like to do. I don't like to keep everything in the brokerage account. Good. So here we have accumulation. Enable that. Price imbalance candles. Enable that. It's just going to show these white and lime green candles. And if for some reason you enable these and the indicator is not showing them, I'll show you why that would be. So if you go to properties and chart on foreground, if I enable this and everything's gone, you think, but it's enabled, but I'm not seeing it, what's going on? And that's because the setting of the chart is wrong. The indicator is configured correctly, they're enabled, but you have to change the settings, the properties of the chart itself by ensuring that the chart is not on the foreground, like that. Okay, I get a lot of questions about this. You just make sure that you're aware of this setting. Okay, and then we have the orders, and this is if you have if you copy orders from Forex Live or some other premium service, you can simply copy these price levels here. So let's see, let's say we have bids, and the bids are at 7. Let's say, and then we have the offers at, let's say, 72.50 and 7.3. Okay, it's going to do, it's going to look at the values that you specify in here, and it's going to look for the delimiter, which is a space. You can see there's a space in there, and it's going to draw lines on the chart when this is enabled based on this information. You can see here it's going to put in the areas where the offers are going to be located, and here we have the information where the bids are going to be located. So this is just, again, a visual cue as to where price might bounce. But this is the information you'll get here is going to be based on some kind of a like an order book or order level information that you get via either a premium service or some other public area. So this is just a pretty interesting feature that I've added. This has been around for many years. I'll turn this off. And the colors, here we just have the colors configuration. So this is the default color for the dashboard. So when swap information is 0, there's no difference, or your broker isn't showing you any swap information, or then the color of the text here will be white. And we have all the other colors for the different times. So we have purple for the monthly, orange for the weekly, white for the hourly, and so on and so forth. And you can feel free to change these as you like. But that is pretty much the essence of what we have available. The core, as I mentioned, has received a significant update, and I'm very pleased about this, because now, before I was skipping over some bars. So if I had this area that was qualified, it would skip over a couple of bars and it would find. So we're constantly skipping over a bunch of bars, number one for optimization purposes, but also because the logic was kind of built up like that. But now, because of these more strict qualification rules, we don't have to do that. So we're looking at everything, and it's working incredibly well, really well. So I just like to have this information available to me, and I want to be able to see this stuff. And I think that you'll find that that these levels are absolutely phenomenal, and we're seeing some incredible results. The robot is now based on the same information, so it's going to be trading this information. The robot is doing something a little bit different and something that's really cool, and I'll just touch on that now. So what you can see here is you have this level here, which is being qualified. Price went up, it came down, it went up, we accumulated, and then it went up. I mean, the robot is essentially looking for the low of this area of accumulation. It'll mark it off like so, and the order will be put in the market from this area and below, because this is essentially the edge of the buy zone. So price pulled back, and this is where the liquidity was found in order to push price higher. This is called kind of a deep zone configuration that we have in the pull spot. But this is just showing you exactly where it is. This is the low of the supply, and this is the high of the area for this level here. And here we have, this is the high of the area of demand, and this is the low. Okay, and so it's very powerful and very useful. But if you have any questions about this, please publish them in the Pipnotic channels on our chat server, and we will get to that ASAP. Yes, I hope you like the new features. I love them. They're very powerful, and I think that you'll see that price is bouncing at these areas more than ever. But just keep in mind, when price is popping through, when we have like tummies showing like this, just be careful buying high, buy low, sell high. Also, when we have downward sloping trend lines, and we have price kind of doing this, just be careful buying in the lows, in the low range of this move here. Consider buying up here and above this area here, okay? And then I think you'll find some very nice price sensitive areas. Cool, I'll leave it at that. Thanks for watching. Again, push your questions in the chat, and I'll see you later. Thanks.